Hi everyone, I'm Eddie O'Neill, president of Coastland Mortgage and your mortgage expert. And today I wanted to talk to you about credit, how to improve your credit scores so that you can qualify for, the lowest interest rates, not only for a mortgage, but for credit cards. It also, credit scores impact other things in life, like, when you go get a bank account, they run your credit, and if your credit score is too low, they're not gonna let you open an account. When you're applying for an apartment, to rent an apartment, they're running your credit. And then even a job now, most jobs actually check your credit. So the credit scores do have or play a very important role in our lives. But particularly for mortgage, it determines what interest rate you're going to pay and how much you can qualify for. So it's very important if you're trying to purchase a home. So here's a few tips on how you can, maximize your credit scores. So one is you want to pay your bills on time. So that's going to be the biggest thing that impacts your credit scores, making those payments on time. If you miss a payment, it drops it significantly, and it takes quite a while for it to recover from that. So definitely make sure you're paying your bills on time. The second thing is you want to reduce the balances on your credit accounts. So ideally you want to have it less than 30% of whatever the credit limit is. So let's say you have a credit card with a $1,000 limit. If you have a balance on that credit card of $300, that's 30% used credit. So you want to keep it below that, and that's going to give you the maximum scores that you can have. The other thing is you don't want to run your credit a lot. So don't go out and apply for credit cards all the time, or apply for cars and things like that. Be wary of anyone running your credit so that you can maximize your credit scores, because each time you do it, it ticks it down a little bit, 2 or 3 points. So when you're doing it quite a bit, it's going to have a significant negative impact on your scores. And then the last thing you want to do, which most people aren't aware of, is you don't want to close old accounts. The longer you've had a credit card per se, the better it is for your credit scores. And then there's a ratio of, total credit available and how much of it's used. So let's say you had 5 credit cards with $2,000 balances on each. So that's a total of $10,000, and you only had a $2,000 balance across all 4 cards or all 5 cards. That would mean you'd be using up 20% of your available credit overall, which is good. But if you close 2 of those accounts, then you wouldn't have that available credit number would go down, and then it would look like you were closer to 40 or 50% of your available credit used, which would have a negative impact. So don't close old accounts. So hopefully that helps you maximize your credit scores. I'm Eddie O'Neill, president of Coastland Mortgage and your mortgage expert, and I'm here as a resource for you anytime you need it. So thanks again. And one more thing is, if you don't have any credit, take a look at our other video that will talk to you about that. Thanks again.